We're back with Tom Lee's most recent market observations. He is a CNBC contributor, managing partner, and head of research at Fundstrat Global Advisors. I believe people forget, but your perspective and opinions are always somewhat nuanced, Tom. I wouldn't say you altered your long-term perspective when you were on last, but you did voice some short-term caution after remaining largely bullish on small caps through the end of the year. The folks who watch Squawk and follow you want to know exactly what you should be doing at all times. Thus, it appeared to them that you had faltered on your long-term perspective. I believe you will say the same thing today. You admit that there may be some bumpiness and choppiness in the near future, but you believe the S&P will reach 6,000 by the end of the year. Yes, exactly. Given that the election is less than 35 days away, and that investors are currently unable to discount two factors, I believe we are still in the middle of a very difficult time. The first is escalating Middle East tensions, followed by a port strike that might have an impact on the economy. As a result, I believe that even if there is a significant decline, investors should still buy it because there are several tailwinds heading into year-end. We've already shut down an economy, which was likely a time to buy, so that's the worst-case scenario for the port issue. Since we are aware of that, we'd already viewed the film. Although I doubt it will be as severe as the pandemic, we have previously shut down an economy. Yes, exactly. Therefore, I believe it raises headline risk because, as long as this strike continues, some companies may fail, which might result in a reduction of S&P profits or in some stocks missing results. However, all of that is only temporary. After all, those are only short-term obstacles because they have no bearing on the long-term picture. It's fascinating that despite the fact that we've experienced a number of wars in the 1990s and 2000s, none of them seem to have the same detrimental impact on the markets as we initially believed. Yes, exactly. In reality, you virtually always support the invasion if you look at the last 6 major international conflicts. The one exception was the Russia-Ukraine war in 2022, which was not a buy the invasion situation because we were also in the middle of a Fed tightening cycle. However, you did wish to purchase during the other 2 Iraq conflicts. Yes, both conflicts in Iraq. And prior to that, where was the market? Were they trading at or close to highs, or had levels dropped? Yes, this is different since we are in an extended market. We are hanging around highs, and the multiples aren't cheap. Yes, but we also know that there is a lot of money sitting on the sidelines because margin debt hasn't increased in 4 months, which is quite rare in a rising stock market. I do believe there is firepower since money market cash has been increasing at the same time the Fed is making cuts. The other issue, just the prolonged strike, if it lasts for a long time, is that we already discussed how much the GDP is affected. If it lasts for a week, it may reduce GDP by 0.3%. Yes, for each week that they are away. Are there inflationary considerations that also play a role and tie their hands, or does the Fed's intervention with far more extreme cuts solve the problem? The labor market is also softening, so the Fed needs to sort of factor that into their calculations. Because of this, the Fed will be much more dovish if this shock weakens the labor market. However, the payroll report is due on Friday, and based on preliminary indications, it may turn out to be stronger than anticipated. But you also factor in the possible impact of inflationary pressures from the longshoremen's strike and possibly rising Middle Eastern oil prices. Yes, exactly. At this point, I believe the Fed would be more worried if consumer expectations, which have been rising, were not dependent on inflation. Therefore, I believe the Fed may relax its concerns on inflation. Did Tara mention China to you? Do you think you'd ever believe that? Make a lot of purchases in China? Indeed, I would argue that China has not only launched a bazooka, but that it is also effectively doing so, due to the fact that the stock market has truly exploded. The best performing stock market this year, in my opinion, is China. Was the move made, though? We had Kyle Bass on yesterday, and I believe you would say that, regardless of your opinion of China, it's a horrible idea. I don't think he was directly expressing an opinion on whether the bet was over, but he was implying that it might be a decent bet in the short run. However, the relocation, the main shift, of course, has taken place. Do you notice that doubling then? At this stage of the game, is that in the cards? Yes, something that people will remember. China has underperformed the US by 7,700 basis points over the past 10 years. China is still underperforming by about 5,000 basis points, even if it doubles. Therefore, even if it appears to be corrective, there is still a lot of space for a rally. His words, I believe, were along the lines of, "It's just a lousy gamble on communism." No, he says it's a lousy bet in the long run. In the short run, he says, it could be a wise investment. I'm not sure, but it's nearly like the communism of our grandfather. Does capitalism built on communism require a portmanteau? Perhaps Bomick. Andrew, I'm kidding. Joking aside, who has greater sway in this market, though today is an exception. Both are significant, and they represent various investor perspectives. You still want to buy the greatest businesses and the most significant themes, in my opinion. For example, Nvidia and Apple will be successful in any cycle. However, the cost of money, mortgages, and vehicle loan rates, these are really strong tailwinds for cyclical equities and small caps in particular, when the market starts to think the Fed is going to raise rates back towards neutral. Because of this, I believe I would still like to place a highly informed wager that small caps have a good chance of performing well throughout the course of the upcoming year and even from now until the end of the year. We haven't discussed your granny shots in a long time. Please remind us of your reasoning for liking some of these stocks. Indeed, the foundation of granny shots is the notion that there are themes, such as the multi-secular drivers of an economy. Our initial granny shot model examined energy security, artificial intelligence, cybersecurity, and millennials as a generation. We then want to buy the strongest stocks in those themes. And that's actually where granny shots and brands like Apple and Nvidia came from. Since Nvidia has been on that list since 2019, I believe it's crucial for investors to select the greatest businesses and hang on to them for the duration of the cycle, rather than trading the most well-known brands. All right, Tom, night's reminder. It was a nice day for the little caps that I know you're keeping a close eye on. But is it September or not? We had a difficult beginning, but part of that is now behind us. Indeed, if viewers are somewhat perplexed, I believe that's how the next 8 weeks leading up to Election Day will be. It's a really difficult time, in my opinion, since nobody can be certain until they truly know who is in the White House. However, there are some encouraging factors at work, and the Fed meeting is next week. Given the positive inflation numbers and the need for help in the labor markets, I believe the market will gain some confidence in the Fed's decision to make some cuts. We do, in my opinion, trade well going into that meeting and possibly the one or two that follow. Do you believe we'll bounce around in the 5,300 to 5,700 zone, or does the market need to move 50 basis points? I believe that a 25 or 50 might be seen as either dovish or hawkish. In the end, I believe it will depend on Fed Chair Powell's demeanor. If they are certain that we are returning to neutrality at the beginning of a cycle, then any figure they choose is actually very dovish and optimistic. However, I believe that the market may interpret anything the FOMC does negatively if it appears that this is holding them back, and there are even worries about a harsh landing. But I believe the results will be positive. However, it would appear that the Fed would be talking about it. In terms of rate decreases, they didn't want people to get very excited, but now that they're available, it appears that they